Financial power, at its highest level, transcends basic personal security and comfort. It moves beyond individual dominance or the creation of a personal legacy. The core essence of this elevated financial power becomes fundamentally about influence. The focus shifts from accumulating wealth for individual gain. Instead, it centers on leveraging resources to achieve broader systemic impact. This influence can shape industries, policies, and societal structures. True financial power is not solely defined by an individual's or entity's net worth. Net worth primarily represents the total accumulated assets minus liabilities. Instead, true financial power is measured by its economic impact. This reflects the capacity to shape and drive economic outcomes and influence markets. Money, in its isolated form, possesses an inherent neutrality. It is neither inherently good nor bad, existing as a tool without moral alignment. Its potential for impact emerges only when capital is imbued with intention. This intention transforms neutral capital into a directional force. It then actively shapes and influences market dynamics and outcomes. Thus, the true power of capital lies in its directed application. Capital, when deployed with specific intentions, gains the ability to shape entire markets. This intentional allocation transforms neutral funds into an active agent. The active agent directs economic trajectories, influencing market development. Strategic capital deployment is a powerful tool for market transformation. The traditional investment focus centers on personal portfolio growth and wealth accumulation. This approach prioritizes strategies to maximize individual financial return. A new perspective shifts the inquiry from, "How do I grow my portfolio?" The focus transitions to, "Where should capital flow?" This indicates a move beyond personal wealth to strategic capital deployment. The objective becomes broader impact and value creation, not just individual gain. Capital allocation is a fundamental economic process that dictates the growth trajectory of industries. It involves the strategic distribution of financial resources across various sectors of the economy. This process directly determines which industries receive the necessary funding for expansion and development. Strategic investment channels, resources into sectors identified as vital for economic progress. Such targeted investments foster the growth and development of these specific industries. Ultimately, capital allocation shapes the economic landscape by promoting specific industrial expansion. The scaling of technology, from nascent ideas to widespread applications, is heavily influenced by capital flow. Adequate funding is a critical factor for the successful advancement of new technologies. This funding supports essential research and development phases, crucial for innovation. Capital also facilitates market penetration, allowing technologies to reach a broader audience. Ultimately, the availability of capital accelerates technological progress and adoption. Capital is fundamental to the survival and prosperity of businesses in any market. It provides essential resources for daily operations, innovation, and expansion. Strategic investment of capital can offer critical lifelines during challenging periods. It also unlocks significant growth opportunities, fostering development and market reach. The availability and deployment of capital directly influence a business's endurance. Ultimately, capital determines which enterprises thrive and succeed in competitive environments. The direction of capital flow significantly influences community growth and development. Investment acts as a catalyst, channeling resources into specific regions. This influx of capital can revitalize communities facing economic stagnation. It leads to the creation of new employment opportunities for residents. Furthermore, investment improves essential infrastructure, enhancing living standards. Ultimately, strategic capital flow fosters sustained prosperity within communities. The control over capital allocation grants an entity significant power. This power extends beyond mere financial return. It enables influence over a wide array of economic outcomes. Entities can shape industries and market dynamics. Furthermore, it allows for the influence of societal outcomes. Thus, capital allocation becomes a tool for broad-reaching impact. Traditional investing is a financial strategy focused on maximizing monetary returns for investors. This approach typically operates within a defined, often shorter, time horizon for investment cycles. The primary objective is the generation of profit, making it the paramount consideration. It prioritizes financial gain above other potential factors, such as social or environmental impact. Investment decisions are primarily driven by market analysis and potential for capital appreciation. This method forms the bedrock of conventional financial markets and wealth accumulation. Advanced capital strategy involves a comprehensive approach to financial management. It aims to balance multiple critical objectives beyond immediate financial gains. Key objectives include achieving robust financial returns and strong strategic positioning. The strategy also focuses on securing long-term sector dominance and sustainable economic leverage. This holistic perspective extends beyond short-term profits, prioritizing enduring value creation. Profit is a fundamental element in financial activities, indicating economic success. However, the strategic direction of capital holds a more significant influence. Intentional placement of financial resources can guide economic systems. This deliberate allocation shapes market trends and industry development. It demonstrates that capital's deployment is more powerful than mere accumulation. Strategic capital direction can steer entire economic systems towards specific outcomes. Capital deployed early into emerging structural trends yields significant returns. Identifying foundational shifts in markets or technology is crucial for strategic investment. Early investment allows for disproportionate influence over the trend's development. This approach enables investors to shape the future landscape of industries. Such investments are characterized by their potential for substantial long-term impact. Strategic foresight and capital allocation drive significant economic and social change. Stage 8 investors employ a strategic approach to infrastructure ownership. They prioritize positioning in core industries and essential services, not just individual assets. Focus extends to scalable platforms and fundamental infrastructure layers. The strategy targets long-term economic ecosystems for sustainable growth. This approach emphasizes systemic value over isolated asset acquisition. Systemic growth participation refers to benefiting from the fundamental expansion of an entire system. This concept is achieved by owning infrastructure-level exposure within that system. It focuses on the broad, underlying development and progress of an economy or industry. Unlike short-term trading, it is not concerned with individual asset price fluctuation. Instead, it capitalizes on sustained, long-term trends and structural improvements. This approach aims for stable, compounding returns derived from overall systemic advancement. The capital multiplier effect describes how initial investment generates amplified benefits. Strategic deployment of capital is crucial for this effect to manifest. An initial investment leads to subsequent benefits that exceed its original value. This mechanism amplifies the overall impact of the initial capital. Sustainable systems are structures and processes designed for long-term endurance and prosperity. Their creation involves the strategic application of capital. This capital investment fosters stability and resilience over extended period. The goal is to build systems that can thrive autonomously and continuously. Economic impact is achieved through quiet, calculated actions rather than chasing short-term headlines. It involves building exposure in areas where transformation is inevitable. This strategy focuses on long-term vision over immediate, fleeting gains. Allowing sufficient time is crucial for these actions to amplify their influence. Patience is a key factor in realizing substantial and lasting economic effects. Advanced financial freedom transcends mere independence, focusing on active contribution. It involves actively shaping parts of the economic system through strategic engagement. A portfolio reflecting this level demonstrates vision and disciplined management. It is built upon strategic foresight and a long-term conviction in investments. This redefines financial success as impactful participation rather than just personal wealth. The ultimate principle of financial power transcends mere capital accumulation. Its true essence lies in the effective allocation of resources. This strategic allocation is designed to actively shape the future. When wealth is intentionally directed, its impact becomes an inevitable outcome.